What's going on, guys? Hope you're having an absolutely fantastic day. So in this video, I'm going to be talking about how I 4x my money with Alibaba call options, right? So this is not a video asking you to buy call options or whatever it is. So because I've already sold out, right? So you have to understand that, right? Some people will take this video, oh, you can make so much money, so I should do it as well, right? So I've already sold out, and that tells you all you need to know, right? So you might have remembered a few days ago, basically at the start of the year, I said that, I would have be better off buying just stock rather than the call options. And then after that, it changed drastically, right? I'll show you in a minute, but just talking about it first. So at that point in time, if I just bought stock, right, I'll be up, I think, 20% or something like that, rather than I bought the options and I was basically flat for the year, right? But obviously that changed really quickly as this rally happened, right? Basically, if we can take a look somewhere around here, the rally started and it was around a 25% rally from around, I think, $86. Yeah, somewhere around here was when I made my portfolio update video, and then it just ran up, right? So I've already sold out. That's why I'm making the video, right? If I haven't sold out of options, I don't consider it a profit, right? Because options are really volatile. So let me first walk through what is call options, right? Call options is basically you buying. I would put it in the category of insurance in case of a stock price move, right? So you can also use it to speculate, which is what I did in this scenario, right? So basically, I wouldn't recommend you have a big position in call options as in your portfolio, right? Unless you are playing, let's say, in the money call options, right? Then it's something different, right? But if it's in the money, I rather buy stock. So in this video, I basically want to walk through the timeline of the call options. And even though it seems very easy, right? Actually, I 4x my money basically in a matter of 4 days, right? So it may seem very easy, but I do want you guys to walk through the journey to get here, right? So everything seems very easy when you don't go through the whole journey, right? And also one more thing is I want to talk about a psychological factor, right? Which is why I made this video, actually, the main point of this video. So I started buying the call options somewhere around here, my first batch of call options, right? And this is where position sizing is actually incredibly important, right? Because I started buying call options here, then I bought somewhere here again, and then I bought somewhere here, right? Yeah, I bought exactly almost here. Actually, I bought at $61, right? And you can see that here I bought I think it was around 20% of the position. Here was around 50% of the 40 something percent of the position, maybe just 40% of the position. And here I actually went in really heavy, right? So you can see that as a price decline, right, my position sizing got more aggressive, right? Here I actually 1.5 times my position, right? So basically if I had, let's say, 10 contracts, just an example, if I had 10 contracts, basically I bought 15 contracts on top of that, right? Because here it was incredibly cheap, right? Somewhere around 65 cents, where else here the contracts were selling somewhere around $2.50, if I'm not wrong. So one more thing to note, I don't want people to get the wrong impression from this, right? Because I say it's incredibly cheap here, because not because the stock price is going down, right? Because you always have to compare price compared to value, right? And at that point, I think around 50 or 40 something percent of the company was in cash, right? So can you imagine that the cash position was around 40 or I think 50% of the company. Maybe it's not so dramatic as like 50, but that is why I'm saying that it's cheap, right? Not because of the price going down, right? So this is where really knowing what the fundamental value of the company is really comes in, right? And this is where, like, oh, Party Congress just ended. You would expect there is more stability. So when you have some kind of view against the market, right? So this part is actually where it sold down around 20% just in a matter of 2 days or something like that. So if you have that kind of view, right, you have to really plant your flag and take your stance, right, instead of conforming to the market view or what, right? So if you're right, then you'll be proven right eventually, right? But if you're wrong, then I guess you're wrong, right? So my average price works out to $1.15, and you can see yesterday I actually sold. Not yesterday, a few days ago, I actually sold it for $4.50, right? And I have another order ticket, the second half of this batch, which I sold at $4.75. So it's an average price of around $4.65. Actually, it's $4.625. So you can see that there was this actually massive rally up to, let's say, December here. So you can see this is the what I'm talking about, right? So somewhere around here, it's the stock is actually up 41%. Obviously, I didn't buy everything at the pure bottom, right? Because if you put it from here, then yeah, the stock is only up what 20%, right? But averaging down, if I just bought the stock, I think it'll be up 20 to 30%, right? But actually at this point, I was up around 0, right? So you can see that there was this gigantic rally of 25%, and I sold off my options, right? Because anytime you are quadrupling your money in a few days, I think you better take your profits and run, right? Especially when you've waited around 4-5 months for this to happen, right? So if you look at the options, it's a 125 strike March option, which you can take a look at here. So as of closing yesterday, there was a bid for 545, right? And that's one thing about options, right? You always look at the bid price instead of the ask price, right? Because it's quite illiquid and the spread is quite big, right? You can see a 20-cent spread, right? That's the only reason the prices can run up like that in the first place. So actually the peak yesterday was around 650. So if I use a conservative way of counting, I can say maybe I would have gotten out at 630, right? If I just held on to it today, right? And that's the second part of my video, right? It was really, really painful to actually see this news come out right after I sold out, right? Basically, Jack Ma to give up of control of this Ant Group, right? Basically, that signaled to the market that Ant Group is coming to IPO sometime soon, right? And it was actually really, really painful because you have to understand with options, just 3 or 4%, right? Especially when it comes to so short data options, 3, 4, 5% moves, right? It's like 50% move in the options, right? And you can see Baba actually started the day at around 113, right? And if I sold at 113, basically I would have gotten even conservatively maybe $6 or something like that. I think it was 650 at the start of the day, right? But let's say even if I got out at $6, that's another $1.50 per contract, right? So that's around a 33% gain just for waiting another day, right? But of course, we never know what's hiding around the corner, right? It could have been down 5% today, and the options basically would have been down maybe 33 to 40%, right? So the downside is asymmetrical also, right? Because every incremental dollar basically is asymmetrical, right? With options. So one thing I want to talk about is, of course, it was incredibly painful to see that, you know, I could have made another extra maybe 33 to 40% just if I waited one more day, right? But one thing to note is that we can never time it perfectly, right? And my theory was we're going to hit this 110 basically ceiling, right? And I don't know when we're going to hit it, but when we hit it, maybe we're going to have a sell-off, right? Which is somewhat correct, right? Because in the Hong Kong market, actually, it closed around 113 US dollars, right? Because the Hong Kong market is a different currency, so it trades at around 110, but actually when the US market opens, it's 113, right? If you're wondering why, it's because 1998 share is actually 1/8 of a US share, right? So the currency is also only 7.8, right? So when you convert the math, there is a bit of a discrepancy there. So going back to psychology, right? It really hurts to see this, right? You can be up another 33% in one day, right? But always remember, right? You can never predict the top, and you can never buy exactly the bottom, right? In this case, I was just lucky, right? Because I was buying somewhere, let's call it here. Yeah, buying, and then I managed to catch the bottom, right? And when this rally came up, I didn't buy anymore, right? So I like to buy as the prices go down, right? Because this to me is lower risk and higher opportunity, right? That's why I sold out here, because this is higher risk and lower reward, right? So it's not something that I really like to dabble into. So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel. And also watch till the end, right? Because obviously you don't want to miss any important information. So basically something I learned from this missed out opportunity of 33%, right? Maybe I could have just sold half my position, which I did sell half my position, and then the next day I sold another half, right? So maybe I could have held on to it a bit longer, but I really didn't want to hold on to it because of the IV was very high, and also the time decay was really kicking in, right? So I didn't really want to hold on to it. So one thing I really want to talk about is not having any regrets when investing, right? Because obviously we are going to have so many of these opportunities that we miss in the rest of our lives, right? Maybe we miss a stock that we were looking at intently, but we thought, I don't think this company can do so well. And then it becomes the next Apple, right? So that is something that we have to live with, right? In this case, it's just very painful because it was fast, right? In that case, maybe you have time to get back in even after you made a wrong decision, right? Maybe 2 years later, you can still make the same decision and basically buy the stock, right? But in this case, because it's 1 day, it's very painful. And some people will, FOMO and buy back in, right? But that is exactly what I'm trying to tell you guys to avoid, right? Because you make one mistake by selling too early, right? Don't compound the mistake by buying in again at a higher price and going against your investment thesis, right? So because my technical analysis here was that the RSI is heavily overbought, and BABA basically had these rallies, right, where it's like 25% to 30% rallies, and then it cools down, right? And this cool down period is really where your option bleeds the hell out, right? Because you can see it rally here, then it somewhere around here it was worth around $3, right? And then you can see it bled out to $1, right? Basically here, and you might be wondering how come the price is higher, but then it's still worth the same amount, right? And that's just how options work, right? You have to bet on the time and also the magnitude of the move, right? That's why options is not for everyone, and I don't recommend anyone dabble in this if they don't have a good idea of what they're doing, right? So going back to it, I saw the RSI was heavily overbought. Normally BABA has this 25% rallies and then they have a pullback. And then the third thing was there was this 110 level where it's acting as heavy support in the past, right? So it will act as heavy resistance now, right? So looking at all this, I made a decision, right? And like it or not, we are all going to have to make all these investment decisions in the future, right? So I think the key lesson to really take out of this is we are all human, right? This will be very painful, right? If you find out that you could have made 30 or 40, 50% just if you waited another day, right? And I think this will surely happen in our investing lifetime. So I do encourage you guys to, when it's very painful like this, reflect on what you could have done better, right? For me, maybe I could have sold half my position and held half my position, right? But I just went with what I thought is correct, what the data was pointing me to. And in this one case, it's wrong, right? But you always have to look at things out of 100 cases, right? I think out of 100 times, right, maybe 80 times this will be the correct move and 20 times this will be the wrong move, right? In this case, unfortunately for me, it's within that 20, right? But we do have to look at things like long term, how it will pan out, right? Instead of thinking of it by a decision by decision basis, right? We look at it at a probabilistic perspective, right? So I think to conclude this video, two things, right? First of all, every time you make a mistake, look at how you can refine your strategy to stop yourself from making these mistakes, right? So number two is that don't regret your investing choices, right? Because in the end of the day, we are going to have to make many of these choices, right? And if you let this bug you at the back of your head, oh, you could have done this better, you could have done this better, it really impairs your future choices, right? So that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.